All right, so let's begin. And the focus of our show today will be on your index strategies or your passive strategies. To talk more on this, I have with me Suresh Sathagopan, founder, Ladder 7 Financial Advisors. Hi, good evening, Suresh. And with you, our focus will always be on passive investments. And today, let's analyze the run-up, in index funds is concerned, because a lot of investors, especially the large cap ones, are willing to continue their index strategies, at least in the large cap space. So I really want to first understand or begin with the roundup of index funds market cap wise in 2023.
Yeah. So, you're right. I mean, as far as the index funds are concerned, large cap oriented index funds, whether it is a Nifty 50 or a Nifty 100, BSE 100, or even a Nifty 500. So, any of the index funds which are based on this have had, a muted run, but a good run. I mean, as compared to, let us say, a small or a mid cap. But the point which I would want to make to all the viewers here is that it is important to have large cap stocks as a bedrock of one's portfolio. Small caps and mid caps may be exciting. At certain points, it may give very good returns, like it has done in this entire year. But large caps are going to be stable, and when there is turbulence in the market, large caps typically they tend to be the say sector leaders, and they will be able to emerge out of any storm. So it is the large caps, though it is giving a comparatively muted return, it is good to have a good large cap portfolio. And if you look at the performance of actively managed large cap vis-a-vis index funds, it's fairly evident that actively managed large caps are not able to beat the index funds for the most part. There is a SPIVA report which compares the performance of the index vis-a-vis the active, and it shows that 75% of the time the active funds are not able to beat the index in the large cap category. So there is every reason for us to look at large cap funds, invest in large cap funds via the index. That may not exactly be the case as far as small cap and the mid cap funds. There is a reason for that. The large cap funds are actively followed by a whole range of analysts. That is not really the case in the case of mid and small caps. So there is always a potential for a fund manager to nimbly go and pick certain stocks and have that in the portfolio and show a much higher return as compared to an index, which may have 150, 250 kind of stocks. So if you really look at it, I mean, there is a case for active investing in the small and mid cap space, but probably not in the large cap space. And that will continue in the future as well.
Suresh, let's also talk about the case of over diversification in large cap space specifically. Now, assuming someone has an index based large cap fund and also has large cap stocks in their portfolio, how would you like to help our viewers understand the over diversification strategy over here? Because the universe of a large cap, in terms of companies, in terms of spaces, is very limited, even for a fund manager. How do you avoid such kind of over diversification?
I mean, if somebody is, say, sold on the idea of a passive fund, which is an index fund, and you already have a, composition of the Nifty 50 or Nifty 100, you are essentially, you have bought into all the stocks in that particular ratio. See, there are also certain smart beta funds where you may want to, based on a particular theme, you may want to have certain companies which are high on value or momentum or something like that. Among the 50 stocks, you can choose 20 value stocks. I mean, that is also something that you can do. So the point is that, I mean, beyond maybe one or two index funds, you really do not need to actually go into picking and choosing the stocks, unless, of course, you are very bullish on a particular category. For example, a particular sector. For example, if you are bullish on, let us say, a pharma sector or a banking sector or any other sector, and there are sector-specific funds available, you may want to choose maybe a sectoral fund instead of actually cherry picking stocks. That may be a better idea if you are bullish on certain sectors. But having multiple mutual funds and then also having a full stock portfolio and all that, what will happen is it'll make the portfolio unmanageable, And at the same time, it is not going to give you any better diversification or better returns for all the effort that you will be putting in. Simple suggestion from my side is that go for a appropriate index fund, like for example, a Nifty 100 and a Nifty 500. Or if you want to really play it, I mean, if you have high conviction, go for a Nifty 500, which anyway will have a 70% allocation in large cap. And maybe if you are particularly bullish on a particular sector, for example, pharma, you may want to go for a sectoral fund in pharma. And that's about it. I mean, so there is no point in having 7, 8 funds and then you also have a stock portfolio and things like that. It is not going to, even if your idea is of returns, it is not really going to help you in any major way.
Now I really want to understand strategies going ahead in 2024. As we all know that the large cap story is again making a comeback, and you definitely cannot have a portfolio without having a large cap exposure. You know, come on, you need stability in your portfolio. I mean, you might see a great run up and still more steam left in mid cap and small cap. Having said all of that, you need to have certain amount of exposure. Maybe you want to rebalance it again. So do you think it's the time to play that bet on large cap and especially index based, or go for a passive strategy as far as large cap is concerned? Because we are seeing it's not only passive large caps, you know, or index large cap, you know, the fund houses are coming up with a small cap index based theme, mid cap based index theme. So although it is good to have that alpha in active as far as mid cap and small cap is concerned, but talking about large caps and passive large caps, should you be increasing your exposure looking at the current triggers for 2024?
Yeah, going forward, I mean, there are going to be potential turbulences in the world going forward. See, one of the things is I think there are some 7 or 8 countries which are going up for election. India being one of them, USA being one of them, South Africa being another. So there is going to be a bit of turbulence worldwide. And if you look at the election, I mean, that is coming up, we don't know. I mean, there is a certain expectation that the current government may get elected, but that was the expectation even in 2004, and there can be turbulence. I mean, the expectation can be, I mean, can be completely wrong. We don't know. So we need to be prepared for any turbulence that may be there because of election outcomes, which may not really be in line with the market expectation. Having said that, there is also another thing that we need to look at. The world is slowing down. Inflation is still at a slightly higher level. World economies are growing at say 1 and 2%. And any country which is exporting, India is not a great exporting nation in that sense. Our exports are only about 22% or thereabouts. But all the same, if the geopolitical situation kind of, I mean, slides down from here, it can affect India, though India is placed quite well if you look at various broad parameters that are coming out at this point in time. It is well placed. I mean, all the pundits and all the various people like JP Morgan and all that are predicting that India will have a good run for the next several years. However, from an investment standpoint, I would want to be cautious. I would go with what you said, Kavita, that large cap should continue to be, I mean, the bedrock of the overall portfolio, more so in the coming year, if you ask me. Mid and small caps can be through actively managed funds, because I think there is still some juice available in the mid and small cap space for the fund manager to actually actively pick and deliver that alpha. Though if you really look at I mean, the recent performance of the actively managed fund, they are struggling to beat the corresponding indices at this point. But I think that is a short-term phenomenon. So largely what I would say is have a good bedrock of large cap portfolio with passives in it. Continue to have a small and mid cap portfolio. Maybe you can have some hybrids. I would suggest a bit of gold in the portfolio going forward, considering the amount of geopolitical uncertainties and potential turbulences. I expect gold to also do well in the coming years. So 5 to 10% in gold through appropriate, maybe sovereign gold bond, maybe index funds, gold funds, can be something that one can look at for the coming year.
Right, Suresh, thank you so much for being on the show today, and I'm sure we'll be discussing more on passive strategies as far as investment portfolio is concerned. But once again, thank you so much for helping our viewers with this today.
Thanks a lot.
All right, on that note, let's slip into a quick break, but then post that, let's get your mutual fund portfolio queries answered.